So when it comes to protecting yourself, it's really going to be difficult because there's probably going to be more interest rate cuts. I think President Trump, he's been demanding it. He's not satisfied with I think it's been 3 or 4 over the last nearly a year now. He's not happy with that. He wants to go to other countries. He wants to adopt the ZIRPs and perhaps even a NIRP. So it's going to be hard to protect yourself if you have negative rates. Let's say you have a bank account and you're getting next to nothing. These banks may eventually follow Switzerland, where they start giving you a haircut on your deposits. So I guess the only way to protect yourself is to, of course, buy gold, buy something tangible. That's how you can protect your assets. But overall, it's going to be hard if you're an American consumer to somehow protect yourself from anything else.
SDBullion.com is a high-volume physical gold, silver, and precious metal dealer. We are committed to being your trusted source for low-cost, highest quality investment-grade bullion products. Visit SDBullion.com for more information.
Welcome to a Silver Doctors exclusive. Today I'm excited to have first-time guest, Mr. Andrew Moran. He's an economic columnist as well as a blogger as well as an author. And today he's joining us here on Silver Doctors to share his thoughts on the global economy, geopolitical events, and a variety of other subject matter. So Andrew Moran, welcome to Silver Doctors.
Thank you for having me.
Well, I appreciate you taking time to sit down with us here and to share your thoughts on what's going on. So we do post your articles over at Silver Doctors, the blog itself. So definitely I followed your work and excited to connect with you here on Silver Doctors. And so before we move further, for those that may not know Andrew Moran, can you give us a little bit of your background and how you've arrived at this point in your career?
Yeah, well, I've been interested in economics since the Ron Paul campaign back in 2008. He really drew me into this world, and I've been, really studying it since then. I adhere to the Austrian School of Economics, and I apply that thinking to all my economic writing over at LibertyNation.com and Economic Collapse News, and I also write for commodities and foreign exchange markets at EarnForex.com. So I have quite an eclectic background, but mostly it's based on Austrian theory.
Sounds good. Well, I appreciate you for sharing that with us. And so I want to dive right into it. So we're at the beginning of 2020. And so outside the political chaos in D.C. right now, as well as the Second Amendment gun rights in Virginia situation, we have Davos, there's all types of things I can throw out there. But I'm curious, because you cover a variety of subjects yourself. So I'm curious to find out at this current moment, what's one of the most important or something that you're keeping an eye on that you deem is important to really pay attention to in this new year?
Well, do you have an hour? Because there's so many to touch upon. You have the U.S.-China trade deal. Will China adhere to the provisions of the trade agreement? You have the USMCA. Will it lead to the America First agenda? Will it boost the economy of Canada, the U.S., and Mexico? Will it be any different from North America? You have the gold. You have gold prices trading at multi-year highs. You have palladium at 2,500. You have the repo markets in danger. You have Fed policy meetings. Will they cut rates again this year? Will they leave things at bay? Will other central banks go into sub-zero territory? So there's so many to dive into. It's very hard to pinpoint one specific issue that you have to really concentrate on for the global financial markets. Geopolitical uncertainty happening. So pick your poison, and that's what you have to that's what you have to consider in the whole scheme of things.
Right. Sounds good. So right there, so you gave us 4 or 5 things there. So clearly things that you've covered. So let's just touch on the first one. And the first one being the China trade deal with the U.S. as well as USMCA. Give us your thoughts on that. President Trump ran upon the campaign of Make America Great Again, bringing back jobs, bringing back all the infrastructure and things of that nature that's been lacking. And he's also touting how great of an economy we have. And so there's a lot of things that, I question myself, but I'm curious to find out where you stand. So let's touch on the China trade situation. Did we get the best part of the deal?
Well, just go a little bit back with USMCA. I have no faith in that whatsoever. There's not much difference between the North American Trade Agreement and the USMCA. It's a bit more crony. You still have tariffs on there, so I'll give it a C plus maybe. I'm not a fan of trade deals. I like just open market trade. I don't like meddling and all that stuff. When it comes to the U.S.-China trade agreement, I also don't have much faith in it either, because on the agricultural part alone, Under the provisions, China has to buy about $50 billion of U.S. agriculture over the next 2 years. Now, that's pretty hard to do. I was crunching the numbers in one of my recent articles, and it showed that China would have to import 230% more over the next 2 years than it did previously in order to match that 50 billion in agriculture. Soybeans alone, I mean, they're going through right now an African swine flu, and they're slaughtering a lot of pigs, which is a huge market for the soybean feed. So I don't know how they're going to have market conditions acceptable for soybean imports. When it comes to wheat and corn, perhaps they'll meet it. But overall, I think that's the major sticking point for the U.S. when it comes to the agricultural sector, because that's a huge base for President Trump and his reelection. There's one of my colleagues, Sarah Cowgill. She's been writing about Middle America, the heartland, flyover folk, and she's saying that agricultural farmers, I mean, they're pretty okay with President Trump, although the tariffs have really dismantled agriculture. So from you and I who study the markets, we see nothing but danger, but people who are actually in the middle of it, they see nothing wrong with the trade war and these numbers that we keep touting.
Right. And so one of my questions that I have about the whole trade deal, not only the numbers you mentioned, but Stephen Mnuchin was referencing that the portion of the deal, I think a total of 200 billion worth of goods is supposed to be bought within a certain time frame, and it's supposed to be 1 or 2 or 3 years or so. So the question was put out there about the deficit. How will this help with the deficit in our trade deficit or whatnot? And just the fact that it's 200 billion, give or take, over the next couple of years doesn't really make a difference to me in the fact that total we're close to 800 or so billion, I think, from just global importing and whatnot. And so we're already in a deficit. It's not going to be corrected by this trade deal. So in the long run, do you think this will really make much of a difference in making America great again?
Well, what I find interesting about the trade deficit, if you look at the latest, I think it's the BEA who studies the trade numbers, the deficit actually slipped to, I think, the lowest level in 4 years. So that's interesting. But overall, I'm not too concerned about the trade deficit. Trade deficits don't have much to do with the American people, because when you import more stuff, you're getting a lot of cheap goods from China and all these other countries that you import from. So when they subsidize, let's say, industry, they're giving us cheaper products. I mean, the Chinese are the ones who suffer from the subsidies, of course. But when it's sort of a lifeline to the middle class, because now the middle class has a higher purchasing power from these cheaper goods. And also, when it comes to the trade deficit, the U.S. still exports quite a bit. They export space technology, they export financial services, so they export quite a lot. But overall, everyone has a trade deficit. You have a trade deficit with your supermarket. I have a trade deficit with my dentist. You have a trade deficit with the Detroit Pistons. You go to their games, but they don't have you playing on the Detroit Pistons. Though I'm sure you would have been great, though. I'm sure.
Thank you.
With that, but trade deficit, every time there's always doom and gloom about it, I just shrug my shoulders and say, yeah, what difference does it make? I care more about the budget deficit, of course, but the trade deficit, I think people worry too much about deficit because of that word deficit. They equate it with the budget deficit. So that's my opinion on it.
Yeah. Now, another thing I wanted to mention about regards to the trade deal is the fact that China, outside of making promises to acquire more U.S. produced goods, they also are setting up a large amount of trade deals with other nations. Primarily, I know Argentina, Brazil. So a lot of the naturally rich other nations, they've also added new deals with as well. And so it looks like China's setting up all types of trade deals with a lot of countries. And so it leads me to question as to whether or not this phase one deal, nevertheless, whatever phase 2 is and the steps they're going to roll out, will actually make that much of a difference in helping the U.S. when it comes to all the property rights infringement and all of the other things that's supposed to be a part of this phase 1 and phase 2. So what will phase 2 do, according to what you've been able to gather, and will it really, help further position the U.S. in a favorable light, in your opinion?
So I'll go on that in a moment, but I'd like to mention you made an excellent point about Brazil and Argentina. Over the last year, China has really has imported a lot of soybeans from Brazil and Argentina. In fact, Brazil's output is going to surpass the United States, I think, either this year or the next year, according to I think it's the International Monetary Fund. Correct me if I'm wrong. But yeah, so Brazil, they have a huge harvest coming up, and they're selling a lot of their soybeans. Argentina, they had a great opportunity to increase their soybean output and sell more, but the problem is that they're applying tariffs to their exports. So that's gonna hurt imports, output overall. And now when it comes to phase two, it's hard to discuss what phase two is going to be because they already covered a lot of ground in phase one. They talk about technology transfers, currency manipulation, trade, of course. So I think when it comes to the second phase, maybe it's going to be about more enforcement. Steve Mnuchin, he was asked about the discussions of the phase two, and he said that they could cut tariffs if they're abiding by the provisions inside phase one. So perhaps the second phase more to do with tariffs than anything else, but they haven't been really specific of what they want to cover. And a lot of the negotiations are pretty clandestine. I mean, you may have leaks there and there, but overall, it's hard to gauge what they're talking about.
Right. So moving to the next subject matter, which I think really impacts this whole phase one deal and phase two, and it's just a trade deal itself, is the fact that it looks like, and a lot of the mainstream media is pinpointing the tariffs that's being, proposed and passed on China. President Trump was saying that, China's paying us such and such a billion in tariffs, but yet I've spoken with several people who do business outside who have goods brought into the country, and they're saying their cost goes up, which means they're basically passing it on to their consumers as well. So when it comes to the tariffs itself, Trump says that China's paying for it, but yet I've spoke with people who say that they're paying for it, therefore we're paying for it. Will this tariff situation, ever cease? And as the phases move on, will they, in your opinion, lower the tariffs and then things become, it creates somewhat of some type of growth again, because the economy seems to be slowing down. A lot is being blamed on these tariffs.
Yeah, a lot of the data do show that the American people, they're the ones paying for these tariffs. I think the last number I saw is that they paid $1.2 billion in a single month because of the tariffs. Now, under the phase one deal, they slashed the one set of tariffs from 15 to 7.5%, but they're keeping that 25% tariff on, I think, $360 billion of Chinese goods. I can only hope that they cut tariffs because, like you said, China's not paying anything. They're not paying these tariffs. It's the American businesses that are paying. I remember watching an interview with Stephen Moore, and he was saying, well, if China's not paying for anything, then why would they care? Well, they care because then American companies are importing less from China. So, the Chinese government's not paying anything, but Chinese businesses, which are a lot state-owned, to be frank, they hurt the tariffs too. And when it comes to the tariffs, steel is a great example of how it's been damaged, destroyed by tariffs. They started off, very jubilant about it, but a lot of companies that consume steel, not so much produce it, but consume it, they're the ones hurting. That's why you're seeing steel prices collapse because these companies aren't buying as much steel as they used to before. There was a very interesting op-ed, I think it was in the Wall Street Journal, of this one steel executive, and he was saying, well, I support the Trump tariffs, but give me an exemption. I don't want to pay for these tariffs. Everyone else should pay for the tariffs, but I don't want to pay them. So that's tariffs today. And Peter Navarro, this guy, he's being championed at that 90-minute press conference last week in the White House. But that guy, Peter Navarro, the guy terrifies me because he's such a mercantilist. He's such a protectionist. He doesn't like free trade, and everything is blamed on China. The Chinese yuan. Everyone complains about the Chinese yuan, but what about the United States dollar? The Federal Reserve, they manipulate that currency. They destroyed the value of the last century. You don't see China bashing the Federal Reserve. But going on a tangent, we'll talk about the currencies.
No, yeah. So that's definitely something I want to get into. It. So as a result of all this trade situation, the mainstream narrative is that the economy is slowing down. Trade is not, the ports are not moving as much. And so we know that there's an economic slowdown because the mainstream news is now highlighting that things are slowing down. We have CFOs coming out saying that they anticipate an economic slowdown or recession or something like that. I remember seeing the headlines of. And so as a result of that, when it comes to business back here in the United States of America, when it comes to employment, the manufacturing sector, all of those things that would indicate that whether business is either booming or not. Are we currently in an economic slowdown, borderline recession, in your opinion, or will it be coming anytime soon, or what do you think?
Well, I think manufacturing isn't a technical recession because it's really been destroyed by the Trump trade war. But overall, no, I don't anticipate a recession. I know things are going to get really bad in the next, however many of years because of all this debt, all this money printing, all this, Federal Reserve intervention. The U.S. economy is going to be on a free fall. But I don't anticipate a recession anytime in the next, year or two. because if you look at let's say the Federal Reserve money supply data, it's all increasing. There was a huge meteor between the end of September and beginning of December to pay for the repo markets. But overall, the recession, there may be a slowdown. The job markets, they're still creating 2 million a year. All the data pinpoint that there is going to be an expansion. We'll see. I think it's hard to gouge over the next year. I think it really depends on this U.S.-China trade deal. That trade uncertainty really impacted the U.S. economy and global growth. So I think you can answer your question better within the next 6 months. You'll have a better understanding. And also interest rates, I think, will play a huge role. The last interest rate was, I think, September, was it? By the Fed? September, October?
I believe so, yes.
Yeah, so when it comes to interest rates, they usually don't have an impact until about 6 months after. So now you may start seeing some movements from the rate cuts. So the recession, my conclusion, don't expect them right now or in the short term. Long term, of course, there's a huge financial crisis. You and I have been warning about it for years, and that's when you buckle up your seatbelts and pray to the heavens and hold on to your bank account.
Yeah. So speaking of which, one of the things that kind of leads me to the idea that things have definitely slowed down, and if not, there have been some type of fracturing of our monetary system, happens to be in regards to the repo market, as you hinted at. And so I was actually looking at the Federal Reserve balance sheet, and so they abruptly ended the quantitative tightening because they sensed that something was not right, and then immediately went into the repo market directly. And so at that moment, I think it was late August, early September, just looking at the visual aid graph of the numbers going down and then a spike up. And here we are now, not QE, whatever they want to call it. I'm curious to get your thoughts on that. But I believe that back in the beginning of fall, something cracked and something has broken behind the scenes. And now the race is on to keep this thing plastered over until. And so what are your thoughts on that? Did something break, and what are they trying to hide or whatever?
Well, my first thought was I wasn't too concerned about it because it was probably just the Treasury selling securities at the exact same time corporations were making their quarterly tax payments. But then, and also the other fact is that there was likely, all the easy money or the liquidity, it was consumed by the banks because they expanded their lending capabilities. But then, as you just pointed out, if you look at the balance sheet of the Fed, there's been a huge spike in it. And since September, I think there's been $500 billion pumped into the repo market, and there's still another, I think, $200 billion, I think more than $200 billion left on the outstanding repo on the balance sheet. And then there have been some reports that the Federal Reserve, they might lend to smaller banks and the big hedge funds. So there might be something simmering underneath the surface. Jamie Dimon, I think it was in October, he warned that there may be something, brewing that should cause some consternation among investors. So at first I wasn't too worried, but now it's been 5 months into this, and it's never ending. There isn't any slowdown into these repo market injections.
Right.
Your opinion? I mean, do you think there's going to be a huge crash? Do you think something's about to crash with this whole repo markets boondoggle?
Well, my personal opinion is that, when the system broke or something gave way back in the fall, the whole cover-up now is to provide as much liquidity for any and everybody. And it has a lot to do with the fact that during this economic expansion, rates has been so low, a lot of people have taken on debt. Now it's time to pay the piper, and a lot of companies, corporations, or whoever may not have enough funds set aside to actually make those bills, right or whatnot. So there's cash that's needed from whoever. And a lot of people might say that, hey, we haven't heard much about Deutsche Bank, even though I think it was last summer or spring, they were having some issues trying to merge with Commerzbank. It didn't go through. So a lot of the derivatives aspect comes into play. So the question is, where's all those funds going? Because once again, we'll never find out on the surface. And so I think it's to try to buy as much time, because I also believe that Jerome Powell is, gave himself a third mandate, which is to keep this expansion going, because he's hinted at that several times
exactly.
now. So with that being the case now, the goal is to try to keep this thing going as long as possible, and try to use any type of trade deal or geopolitical event in the Middle East or anything of that nature to keep people from paying attention to the true nature of the fact that the balance sheets will continue to go up. And then as an investor, as a saver, it's good to say they won't be offering you more interest on your savings along the way, because there's going to be some rate cuts coming, I imagine. So I think crisis mode is now, to me personally. And so if it is, if it isn't, then, in your opinion, what should people begin bracing for? Because you mentioned that, your savings account and whatnot. And so what are your thoughts? If we are in crisis, how should people prepare?
Just backtrack just a bit more. Yeah, I think your analysis was dead on. I think you're having more money pumping, and it's going to add to the boom. But as you keep adding to that boom, the bust is just it's going to be terrifying to witness. Because I think I mentioned it previously. If you look at the money supply, there was a huge spike between the end of September and the beginning of December. So I'm really interested to see the money supply data over the next 2 to 4 weeks. If there's going to be if you can see major increases also because of this whole extra $200 billion in outstanding repo markets. So when it comes to protecting yourself, it's really going to be difficult because they're probably going to be more interest rate cuts. President Trump, he's been demanding it. He's not satisfied with I think it's been 3 or 4 over the last nearly a year now. He's not happy with that. He wants to go to other countries. He wants to adopt the ZIRPs and perhaps even a NIRP. So it's going to be hard to protect yourself if you have negative rates. Let's say you have a bank account and you're getting next to nothing. These banks may eventually follow Switzerland, where they start giving you a haircut on your deposits. So I guess the only way to protect yourself is to, of course, buy gold, buy something tangible. That's how you can protect your assets. Maybe dive into some foreign ETFs that could help. But overall, it's going to be hard if you're an American consumer to somehow protect yourself from anything else. Especially, because also too, the global economy, no matter how much we complain about the U.S. economy and the slowdown, it's nothing compared to what's going on in the rest of the world. I mean, Europe is such a lost cause. I mean, the European Central Bank, they're trying everything to see what sticks. They're throwing everything at the wall to see what sticks. And now the next thing is not only deepening negative interest rates, but they also want to try dual rates where, I think they raise the deposit interest rate, but cut the lending rate. So therefore, they would try to push consumers into saving more and then encouraging banks to lend more. But that's just, again, it's more just central bank manipulation. So, and then China, in China, you're starting to see a little bit of a reversal when it comes to growth. I think the last GDP number was 6%. It beat the forecast of 5.9%. But as I alluded to earlier in this interview, a lot of the companies are state-owned. So they need bailouts constantly by the central banks because they're zombie companies. They only can survive based on being bailed out, and they can only pay, let's say, the interest on their loans, not so much the principal. So China, that's another dangerous situation unfolding. Japan, they're on the cusp of a recession. I just looked at the industrial production numbers, contraction again. The Bank of Japan yesterday, they left interest rates at negative 0.1%. Capacity utilization was down. Retail sales have been hurt because of the national sales tax hike. So it's really hard to see where you could protect any of your capital. Switzerland, maybe that could be a place to hide some of your money. But then again, the Swiss franc, they're really devaluing it because all the smart money is going into the Swiss franc, and that's elevating this. It's appreciating the currency, and the Swiss don't like that because then it hurts their trade exports because that country is really export dependent. So I mean, Canada, you have Justin Trudeau as prime minister. That country, where I am right now, growth is anemic, so not much there. South America, that's not much of a place to be. Australia, New Zealand. I remember years ago I was so bullish on Australia and New Zealand because their currencies were great. But since then, they've been nothing much has been happening over there. So I'm not. I don't know where I would go. You got to go to Mars, set up an economy there. I don't know. This is very bullish in the long run.
Yeah. So
you have to go with Elon Musk over to Mars. And there you go.
Now, watch this. So you hinted at a lot of nations and there being clear evidence that their economy's having some issues in borderline recessionary type territory. So I read something recently about Germany being in a recession, and then they're also passing some new laws now. I'm not sure if it went through or not this month, but in regards to how much cash you can use for actual transactions of purchasing metals, and without going through the KYC, the AML, all that type of things there. And so clearly, in your opinion, if there's so many nations around the U.S. and perhaps even Canada that's already in recessionary territory, it's being reflected in the price of gold also being all-time highs in a good portion of those countries that are having issues. So is it good to say that we're currently in a global recession? Like, does it take just the USA or the leading G7 nations to actually be in recession before you can officially, according to our commentary, declare that the world is already in a global recession at this current moment?
Well, I think the rest of the world's a lost cause. So that's why you're seeing a lot of money going into the U.S. because as I mentioned, U.S. We complain about the U.S. economy a lot, of all the manipulation and distortions, but there's nowhere else to go. The U.S. economy, it's still a huge force to be reckoned with. It's still, free market capitalism for the most part. I mean, still have issues with cronyism, but that's just for another day. And you see a lot of the bond market. The bond market is a good example of this. A lot of the bond market is going into U.S. Treasuries, and there's still a huge market for it. There's, just this week or last week, the Treasury Department, they issued a 20-year bond. There's all the money managers that the Treasury spoke with to gouge their opinion. They said there's going to be a huge demand for it, and I can see why, because you have a yield, Treasury yield is 1.87%. If you go to Japan, if you buy a Japan 10-year note, you're getting 0.01%. If you buy a Swedish note, you're getting negative. If you're buying a Swiss franc, Swiss debt, you're getting negative. So the bond market is a good illustrative of how the rest of the world views the U.S. economy. And I wrote just before the end of the year of all the capital inflows going into the U.S. because I guess a lot of investors share my opinion where the rest of the world doesn't seem very bullish. Peter Schiff, for a long time, he's been talking about putting money into foreign markets. But if you look at the numbers yourself, you can't see it. Where is a good place to put your money in? You and I just discussed the places that are in recession territory. And then at the same time, you have $15 trillion in negative global bond yields. You don't have that in the U.S. yet, because I'm pretty sure the U.S. will eventually adopt a negative interest rate policy and then set their bonds at very low yielding. So U.S., you have no other choice but to put your money into the U.S.
Right. So you just mentioned that you see sometime in the future where there'll be ZIRP and NIRP officially. And so, you wrote a book a couple of years ago, The War on Cash. And so clearly cash will become very valuable at that point because more people will want to hold physical cash as opposed to settle for the digital blips on a screen that they believe is there. And so what does that look like? Do you see NIRP, ZIRP as a response to an official announcement of a recession, or, it'll be a clear recession and we're introduced to ZIRP or NIRP as a way of extending it even further so that it's not officially announced?
Yeah, so a long time I've been warning about huge spikes in interest rates, double-digit rate hikes, and I think the ZIRP and NIRP are a detour to that. I think eventually you will start seeing double-digit interest rates as inflation rears its ugly head. There's going to be huge, massive inflation because of all the money printing that's gone on over the years. But in the meantime, the NIRP and ZIRP, it's pretty dangerous, especially when you have countries that are declaring wars on cash. Sweden, there's hardly any what's the Swedish currency now? I forgot the name of the currency. But the krona.
I'll probably say krona. Just keep it safe.
Yeah. So there's a lot of physical krona around. So what's scary is that if you put your money into a bank and there's not a lot of physical cash available and you can't really withdraw anything, you have no other choice but to see haircuts in your bank account. Your capital is being eroded by the central banks and the federal government. The globalists are declaring war on your money. So I don't like the idea of not having any physical money at all. I mean, yeah, sure, fiat money is we all hate fiat money. People in our realm. But you still want cash because cash is king, and you have a way to protect yourself. And what I find interesting is that the central bankers they don't look at any of the studies that they conduct. So, for instance, one study I found is that Sweden, when they adopted negative rates and when they had, of course, the gradual elimination of cash, they expected that the Swedish consumer would start spending all the money because there's a negative interest rate. That didn't happen. And the exact reverse happened, where Swedish consumers started saving more of the money. But what they didn't, and other countries that have done the same thing, the Swiss, they're not spending as much as they want. They're saving more. And so what they're doing is that they're taking their currency and they're putting it under the mattress. They're putting it into the microwave. They're putting it in all these places except the bank, because when you have one of the conclusions one of these studies made was that if you have a negative rate policy, you are conveying the message that your economy is on the brink of a recession or of a significant downturn, or the central bankers don't have much faith in the economy. So you're portraying it in a negative light by having a sub-zero interest rate. So that's the backfire. These negative rates don't really work. Ben Bernanke, he recently wrote a blog on Brookings Institute, and he was saying, oh, well, there aren't really any dangers about negative interest rates, except the fact that there could be financial problems happening in the fallout of a negative interest rate policy. So these people, these central bankers, don't really. I think I don't know. You can't go in the mind of the central banker, but you have to think that they don't really think a negative rate policy works. They're just trying to see what happens and what can they do to reverse the declines in, let's say, Europe. They've had a negative interest rate policy for several years now, and nothing's happened. So the only option they have is to go deeper into negative rates and hope that something's going to happen. And then you have the other experiments they have, let's say with the dual rates. So the negative rates, it's terrible. I'm not. No one should be happy about it. And also one more thing is that the central banks and governments, they should not be the ones who determine interest rates. It should be the market to determine interest rates. And I'm sorry if you hear my kids screaming in the background, but they're fighting over something.
No, it's okay. And so, the question will then be is how low can you go before, the consequences of this great monetary experiment that we're part of rears its head above water, and we're exposed for, and this whole sham is exposed for the biggest hoax in modern history, because just the idea of bringing into existence from nothing and then charging people interest on that nothing, and then having a chance to buy tangible goods from the central banking model, it's genius for them, but it's unfortunate for the rest of the world that has no clue about this subject matter. And so as a consequence of this, it looks like the next experiment that they're going to try to roll out is the introduction of digital currencies solely, even though most of the national currencies are digital already, apart from a little bit of paper we're given to use.
Yeah.
And so what are your thoughts about this, them utilizing the blockchain technology and all the blockchain lingo to say there's going to be some coins coming out? We got France talking about the currency, Chinese yuan is rolled out, Venezuelan petro, and all these government or central bank government collaborations.
Yeah, what I find interesting is that when Bitcoin started to make its way into the mainstream, all the central banks were talking about, oh, don't put your money into digital currency. You could be a victim of fraud. Something could be a scam, or there could be a hacking into one of these digital currency websites. I think something like Coinbase, and that's when I thought, okay, fine, maybe there's something into virtual currencies or cryptocurrencies. But then in the last couple of years, you've seen such a huge interest of central banks and governments adopting or trying to implement their own digital currency system, and that's what has me concerned. I don't profess to be an expert on cryptocurrencies or on the blockchain technology. When the government is bullish on something, when they think that they can control the system by adopting something that was supposed to be against the system, then I have some reservation, because digital currency, it's just another way to monitor you and track you and keep you within the confines of the system. So I'm concerned about the Federal Reserve eventually adopting a cryptocurrency, Bank of England adopting a cryptocurrency. If there's a gold-backed cryptocurrency in the free market, then perhaps I'd be more bullish on cryptocurrencies. But overall, right now, I don't own any, and I don't anticipate to own any because of the exact same matter where the banks can monitor you. Sure, they can monitor your cash transactions. Or they can monitor you based on if you withdraw something from the bank or you make a purchase at a store. But overall, you have a better way to be anonymous when you have cash in your pocket than you are if you were to tap with something in Bitcoin wallet on your phone.
Now, as we draw towards the end of our discussion, I'm curious to get your thoughts. Just looking ahead at the future, we're entering into a new decade, and so my personal opinion that we're going to finally find out what this monetary system, will, from a global standpoint, will actually offer the public, and I believe it's going to be a transfer of wealth like we've never seen before. So, in your personal opinion, looking ahead, 1, 2, 5, 6, when it comes to the current reserve status of the dollar, everything China and Russia is doing in collaboration together on implementing gold-backed type or gold. Gold is spoken of heavily on that part of the world. No gold mentioned in here from the mainstream portion. So in your personal opinion, what will the next world order be, or who will lead the way? Just give us some speculation as to what you think might be coming about 2, 5, 10, whatever time frame you might have.
Yeah, I think it's interesting, the de-dollarization push that has been going on in the last couple of years, led by Russia, led by China, led by smaller countries that are trying to veer away from the U.S. dollar. When it comes to who's going to lead the way in the future, that's pretty hard to determine because every country is facing monumental levels of debt. China is drowning in debt. Japan has I think it was 1 quadrillion yen. Sure, exchange rate that's in the billions. But when you see quadrillion, that's pretty that's pretty fascinating to see. But overall, it's hard to gauge who's going to be the next economic superpower of the world, because everybody's on the brink of destitution with all this debt. The only way you can postpone the inevitability of global economic collapse is by doing these negative rates, cutting rates to their lowest possible way, trying to pull a FDR and confiscate people's gold assets. So, China can't do it, Japan can't do it, Russia, I don't think they have the capability of being a global economic superpower. Canada can't do it. So perhaps in the future, you won't see a single economic superpower. What you may have is perhaps, which I don't like that concept of, but a one world government, where there's just a one world global economy. And in a way, you do see snippets of it, where these regional multilateral trade agreements. The USMCA, you have the CAFTA, you have the Trans-Pacific Partnership. So you do have a lot of cohesion when it comes to the global economy through the government. If we're based on market principles, I wouldn't have much of a big deal about it. But since they're government and it's government regulations, government laws, to get an example of that, in the United States, the Democrats are forcing Mexico to adopt its own stringent labor laws. So why should countries encroach on another country's labor laws? And so that's what you're going to see in the future. You're going to have TPP. One of the reasons why I was opposed to TPP was that the unions were in favor of it, because there were some certain labor laws inserted into the TPP, and then environmentalists, they were also pleased because there were other regulations that all these other participants had to adhere to. So the global economy, I guess, it's going to be really a globalized economy. Governments, central banks, working together in sync, forcing countries to adopt whatever rules that these globalists want.
Interesting. Yeah. So at the end of the day, that doesn't sound like it's going to be more freedom and more opportunities for your average person that's not in tune and keeping their eyes open as to what laws and what regulations are being set and put in place on their behalf. So for those that may not know where to connect with you, find some of your writings, can you point it back to your to where you do your work at?
Yeah, my main economic commentary is over at libertynation.com. I write about commodities and foreign exchange markets over at earnforex.com. And you can follow me on Twitter at AndrewLiberty23.
Sounds good. Once again, it's been great having you here on Silver Doctors. Looking forward to continue to follow your work and have you on down the line as we get into 2020 and see where we're at then and get your thoughts and analysis then. But once again, Andrew Moran, it's been great having you here on Silver Doctors.
Thank you for having me. Appreciate it.